Hi, good morning everybody. This is Nicholas Teo from CMC Markets here in Singapore. Markets just kicked off 9:05 in the morning, seeing a very slow start. As I guess the broader market search for direction. We're probably going to find it throughout the day from so many data points. They're all going to center around the flash PMIs, starting from, actually in Japan, they will shortly be announcing theirs, and people are looking for, traders are looking for a break just above the 50 level again. Then we follow closely that after that by the Chinese numbers at 9:45, as you see down here. Again, 49.3, just below the 50 so-called threshold that most people are actually eyeing on. And then we continue through the day where some of the European bodies will be announcing theirs. But essentially, it's been quite a period of mixed trading and mixed emotions over the market. On the one hand, a lot of people want to see a big number come in from these PMI numbers, suggesting that economic rebound is actually in traction down there. But on the other hand, everybody questions that if we do see a big number coming in, or bigger than expected number coming in, will we probably see a withdrawal or a pullback of QE that has funded the markets for a very much large part. Certain things we just want to update. The Japan 225, which we highlighted the last couple of days, is clearly seeing a attack once more of that top, or rather that near high of around 20,250 or so. Like I mentioned the last couple of days in our notes, there is a lot of momentum down there. Momentum has come from good economic numbers we saw in the GDP the last 2 days, and possibly another positive PMI read. Also, we've seen good corporate earnings. It's going to be crucial where the stock is, where the index is concerned and how it trades. Could see it pull back, get comfortable, and maybe attack this line once more. But essentially, it's something that we're keeping an eye on, and it's one of our more favorite candidates to actually follow. China A50 has seen a very volatile 3-4 days. Last 4 days of losses, one big green candle clearing everything out. This is more or less a spinning top, and spinning top could highlight turnarounds. I mean, turn back down. But with China, with most things in China, anything can happen. We've seen huge liquidity flows, and that continues to be the case. And with that, huge enthusiasm in the stock market. So this is clearly a short squeeze sort of move, and it was a huge one. And I think people who shorted, or a lot of shorties, suffered quite badly down here. Essentially, the volatility is still down there. Watch your stops, watch your risk management, and we can continue. Just one stock that we are following, or just one series of stocks that we are seeing on the local market, we've written something about. This is First Resources, as seen here. I've got the charts up here. Let me pull it up. We've seen this pull down, or this drawdown from the middle of last year all the way. It's settled and hovered at this range for a good part of most of this year anyway. It started to gap up very strongly about 3-4 days ago, consolidated that move, and we saw another big pull up yesterday. Now this company, First Resources, is involved in palm oil, or the palm oil business. We've seen huge activity in crude palm oil contracts traded. They are traded largely off the Malaysian exchange. Volumes down there have actually spiked in a big multiple over the last 2-3 weeks or so. Volume in most cases precedes price movements, and people are anticipating that the price movement will come in and share prices actually move. First Resources is one of the companies involved in in terms of the upstream crude palm oil business, and there's been a lot of written reports about El Nino, a weather phenomenon hitting, or rather providing or causing drought-like conditions, which ultimately cause yield in crops to actually shrink. With that, prices actually go up, prices for the crude palm oil itself. So companies like First Resources, Indo Agri, Golden Agri, who are more exposed to the upstream side of the business, may benefit down here. We've certainly seen enthusiasm in the stock price. We could see this consolidate and maybe push higher again. But essentially, they've lost around 20%, over a 1-year period, and they are all, consolidated that low for a long period. Looks like it could go in view of this market that has been stuffed for fresh leads. Certainly something that we are following. Together, this company, together with the other comparable Indo Agri, just to suggest one of these few names. Anyway, Thank you very much, and happy trading.